Okay, let's go ahead and begin reconciliation. We start with our credit card statement. Okay. All right, make sure it is selected. Okay, ending balance. Right here. Ending date. Okay, finance charges. Do we have any? Yes, we do. We have an opportunity to book it right here. Okay, interest finance, that's fine. Okay. Once we move forward, right, we'll book this transaction. Technically, once we complete reconciliation. If we exit it before completing and finalizing it, we'll discard this change. But let's assume we're going to continue and book it. I mean, complete the reconciliation, we will, right? If not, we can make adjustments while in a reconciliation, and we've done it before. So, what's happening? Well, they're going to add that amount, that finance charge, to our credit card balance. Therefore, our liability will go up, has to be credited. What else is happening? Well, our expenses on finance charges and interest go up. Expenses go up when debited. Okay, debits and credits are in balance. Again, as we've seen it before, even though it's entered once, it is both a debit and a credit, right? It's a debit to account 61,700, and it is a credit to account 21,100. Let's start reconciliation. Okay, we see our finance charge right here. Let's check that out. Okay, we can see some of our transactions. Okay, here it is. Let's adjust it a little so we can see it better. Again, this is our online version, so we have to kind of play with it a little bit to see. I'm not sure we can do it. Okay, here we are. Okay, so we have that's our chart right here. Okay. Then we have our payment. And we have our refund. And voila, we're at zero. We did a good job, right? Even though we used this very cool new interface, right? We still completed reconciliation. All right, done. I'm gonna go into summary, credit card. All right, here it is, right? Let's make sure balance matches. Yes, transactions. Okay, payments right here. And then these transactions are right here. So again, we would print this report, attach it to the statement, and we're good to go. We can go ahead and move forward with reconciliation of our bank statement. All right, let's move forward. Let's see. Okay. Make sure we select bank statement. Okay, ending balance. Okay, ending date. Okay, do we still have service charges? Yes, we do have $25. Okay, so again, once we move forward and complete reconciliation, this transaction will be booked. Let's make sure we understand what's happening. Well, we know that $25 for monthly service fee will be taken out of our account, so the balance will be reduced. It's an asset, and assets are reduced when credited. What else is happening? Our expenses, bank account services is going up. Expenses go up when debited. Here it is, debits and credits are in balance, even though it's entered once. It is both a debit to account 61,600 and it is a credit to account 11,100. Okay. So here it is, $25 checked out. All right, what else do we have? adjust our interfaces. Okay. Okay. All right. So we can see that we have our checks, all right, and we can identify them, at least in this instance, the split one. The other one, see, it's showing up in the reference number where we posted. That's why it's important to post it where we can. And here it is. We know that that's our check, even though we didn't book it through check interface, right? So, okay. This one. And then we have a payment. Okay, what else do we have? Well, we have these draw charges, right? We're not in balance yet and nothing else to check out. That means we haven't booked everything yet. So let's go ahead and book it. We're going to book the draw. We know that's the money we're taking out of the business, essentially 6,500. And then we have merchant account fee, right? And technically, again, what we can do is we can go ahead and book it through journal entry, just to show that we can do it all pretty quickly here. And if we wanted to, again, we've explored other interfaces, but this is one of those bypasses that we can demonstrate. We're going to use the end of the month again. Okay, so what's happening here? Well, again, let's go one by one. We know that our account balance, in this case, our bank account, will be reduced. It has to be credited to be reduced. So let's go ahead and do the merchant fee. All right, so in this case, merchant fees, have account for it. Okay, see, debit and credit. What else is happening? Well, we also reduced during that month our bank account by 6,500. That's the money we took out. That's our draw. Okay, so again, we have a draw account. It's an equity account. Equity is reduced when debited. So here it is, right? Again, debits and credits are in balance, and we can book as many debits here and as many credits here as we want, as long as at the end of the day, debits and credits equal to each other. So let's reflect it right here. And we can actually do very, very interesting ones. So here it is, right? Let's go ahead and take a look at our expenses, right? Expenses have to be debited in order to go up. What else is happening? Our equity is reduced, and equity is reduced when it is debited. So you see, actually this sums up to this. So technically, we could do the math on a calculator, or in the case of QuickBooks Desktop, we can actually use calculator inside the software. But that's one more way to book it, is to essentially do the math, right? That's one way. Or we could do this way. All right, here it is. Again, debits and credits are in balance, right? Even though here we're doing it in two lines to kind of do the math, make the software do the math, the account 11,100 will be credited by $6,789.29, and it's right here. Here we have a split. We're hitting a draw and a merchant account fees, right? So again, the equity will get a hit of 6,500. It will be reduced through debit, and expenses will go up by $289.29, again through debit, account 61,500. So again, saving new. Actually, we're done with this. Now we just have to do deposit. So again, see, they're showing up right here. Oops, just give me a second. Okay, so you see our 6,500. That's the sum of this three, and that's our expense margin. We could have booked those individually, right? Again, in the same interface, and we would have achieved the same result because we know our debits and credits. All right, we're not in balance yet, right? Because we have deposits that we have to book. And we know that all of these deposits are from our sales, right? So again, we could book it using general journal entry if we want, or we can use a deposit module. So again, for kicks and giggles, let's continue with general journal entry. End of the month, again. All right, so what do we know? We know that our bank account will go up. Being an asset, it has to be debited in order to go up. We know that all of these deposits, and since they're sales, we can do it as a lump sum, all of them are sales, they're conveniently added up for us right here. So we can just enter that amount. What else? Well, our sales are going up, right? Because we know that that increase in cash came from sales. Therefore, sales slash revenue go up when credited right here. And here it is, right? Debit and credit. They are in balance. We can reflect it here, but again, on this interface, it's easy because debits and credits are right here. So to solidify what's happening, our bank account during the month of April increased by $12,657.25, right? Well, deposit-wise, we took some money out. But the total deposits for the month of April were $12,675.25. They came from sales. We know that much. So sales slash revenue go up when credited. Assets go up when debited. Here it is. Debits and credits are in balance. Our favorite general journal entry interface is in balance, and demonstrating it right here. Saving new. Actually, we can close it. All right. So let's see, where is it? Oh, okay, here it is. Just make sure we can see. Okay. So again, we could do the sum in the calculator, right? But our bank statement sums it up right here. All right, and this equals to this, so we can check mark this. Check mark this. Okay, what happened? We have a difference of $5. Something didn't quite balance. All right, did we make a mistake somewhere? What happened? Okay, how do we catch a mistake during reconciliation? I mean, there's a reason we do that, right? Okay, deposits, let's double check. Lines up, okay. Expenses 25, 289, 6.5, pretty close. Oh, here it is. That's our check. 1012. Oh, okay. So we're off by $5. Let's take a look at the receipt. At the invoice, did we book it correctly? Uh-oh, we didn't. We're off by $5. What happened? Let's take a look, right? So how do we take a look? We go to our reports. All right. All the good reports are under my accountant, right? So we're going to go transaction list by date. That's in this case probably going to be the easiest one. The date at 4/20/4/20. Okay, here it is. Let's take a look at our transaction. Oh, we trusted the numbers that QuickBooks Online remembered from previous, but we had a slight change, okay? Our maintenance fee went up by $5. So instead of 75, right, like it was in March, it's now 80. Well, easy fix, right? That's why we have reconciliation, to catch these issues. And again, a reminder, just because QuickBooks Online or any other software remembered transactions from previous month, you got to pay attention. You got to double check. So let's go ahead and make that notification real quick. Here it is. Save and new. Okay. Here it is. Let's go back to our reconciliation. Okay. And now we're at 0. We didn't even have to click and unclick, right? Because what happened was, for QuickBooks Online, this amount right here, we modified it. It was already clicked. So again, now that it matches. Again, that's the cool feature of QuickBooks in general. While you're in reconciliation, you can make all those adjustments. And that's why we do reconciliation, to catch those errors. All right, well, we made an error during booking. That's what reconciliation does. It catches this $5, right? So now it is in balance, all good. Yay, we know we need to pay attention. Finish now. All right, we can view our reconciliation report right here. Okay, charges, all lines up. Okay, deposits, line up right here. Okay, we would go ahead and print this report and attach it to our statement. And we are done with April.